states, expenditure which is incurred solely for the benefit of employees is not to be taken into account. Technical could be, even if one person is outside the employee's group, I'll take the entire expenditure as CSR expenditure. But that's not forming as part of advice of all the professions, all the professionals. Even if, in other words, even if you have 2%, 3% or 40% of the users which are non-employees, technically they need, we can say it is not exclusive for employees, for benefit of employees, and hence it will be as it will be included. This is the most frequently asked question for CSR. Presentation and financial statement. The moment I say I have incurred expenditure of say ABC amount, now that expenditure, how should I disclose it on the face of the profit and loss account? Yes or no? Should I disclose in my P&L? We can discuss a bit later whether before tax or as an appropriation, the total amount of CSR on the profit and loss account. Will I disclose that? Yes or no? Popular belief is yes, the answer is no. I'll tell you why. We have adopted revised Schedule 6. Globally, there are two ways to present the P&L: analysis by function or analysis by nature. Analysis by function is cost of sale is how much, cost of manufacturing is how much. So if I have employee cost, it will be allocated a certain segment to manufacturing, certain segment to sales. This moment we have not adopted for a revised Schedule 6. What we have adopted is a disclosure of amounts by nature of expenditure. Nature of expenditure, total employee cost. We will not categorize into sales or manufacturing. Total purchases, total donations. So whether it is CSR or not, you will never show. It is quite possible there are overheads, there are other associated expenditure. So it will sit in the respective nature of expenditure. It will not be a consolidated number, corporate social responsibility. That's not possible in revised Schedule 6. However, in notes to accounts, because the disclosure has to be made somewhere, this is a welcome kind of disclosure. There will be a tendency to disclose the breakup or the total CSR expenditure included in various heads and P&L in notes to accounts. That's a better practice. So you are welcome to disclose it in notes to accounts, but P&L practically not possible. The unspent amount. The question is, if there is an amount you are committed to spend, but there is a shortfall, or say you in principle want to spend, there is a shortfall, whether you are required to make a provision or appropriation in your profit and loss account for the shortfall. You are not required to make a provision for the shortfall in your profit and loss account or reserves. Neither appropriation nor provisions. Why? The technical interpretation is coming from AS 29. AS 29 says you make a provision when three conditions are satisfied. A, where there is a present obligation on the basis of past event. B, the payment is probable. And C, a reliable estimate can be made. So technically, there is not an obligation on the basis of past event. It's not an obligation. It's an encouragement. It's a wish list. Now this view will hold good under AS 29, and so is the case which has been interpreted in expert advisory opinion. This was a specific case raised by the department. However, when we are adopting in the X study cell, the definition of present obligation has an extended meaning, and the word also includes constructive obligation. What the word also includes, can you repeat? Constructive obligation. So when I look at constructive obligation, it is interpreted as organization does not have a realistic alternative other than to pay, including the past practice. So if the organization is not having a realistic alternative but to pay, with the whenever IND-AS is implemented or adopted, this will be required to be provided for. But in the today's meaning or today's definition, we are not supposed to do. And so is the clarification in the expert advice. Now, well, if this view is already taken up, then it weakens the case for those who are fighting with or would be fighting with income tax that this is a business expenditure. You can still prove it as a business expenditure. And there are ways to say that this I have incurred to buy peace for the area where I operate, to reduce the resistance of corporate functioning in the area where I operate. So there is a very sound argument which you can 99% by taking the first situation as a starting point. It is not supposed to be a business expenditure. Eventually it can also be a business expenditure. The moment you say it's a business expenditure, then the question arises, it's not CSR. The reference you can take, there is a publication from Institute, Accounting of Special Economic Zone. It is mainly acquisition of land, and while you take land, you necessarily incur a lot of expenditure because the persons are getting displaced. That says, guidance note says, it's a technical guide. It says that this is a business expenditure and you capitalize it along with land. So the moment you say it's a business expenditure, I cannot show it. None of the real estate companies so far has shown it as donations. So once we claim that it's a genuine business expenditure, then the larger question, you may get an income tax. The larger question from the company entrepreneurs and others would be, it's a business expenditure, not CSR. So where is your CSR of this? So it's a catch-22 situation. As a domain expert, you can win over here or there. Difficult to win at both. There are certain donations, like a pharma company may donate their stock. The question is, what is the amount at which it needs to be valued? Whether at cost or at market price at which I am going to sell. We in India has followed historical cost convention. So the second principle is cost. So is the case for employee related. That 7 days in a year, employee can say, few organization can work for foundation, but you will still get salary. So there could be support staff which does not earn anything. Their overall work in the entire year remains same. So practically, they have donated something. But there could be staff, the cash cost is the cost. But there could be staff which are dealing in treasury and they are day traders. So the moment they go for 7 days, to that extent, you have one person earning less for the company. So whether to consider opportunity cost, just an example, or just cost. Needless to mention, it's the cost. But the question was raised in the background here. Capital versus revenue, I have already clarified. Now when we look at global practices, globally, the concept of CSR or green is catching up. Day by day, it is increasing. In fact, most of the premium business schools which typically changes their syllabus, say 40% syllabus every 2 years. One constant thing from last around 8-10 years is the concept of acting responsibly or concept of corporate citizens. So the way these schools are focused to breed up young managers, they include such kind of things. So even when you are looking at your strategy and other places, you get the concepts in relation to CSR. So various agencies publishes various documents, and few of the documents which are widely circulated and referred in the conversations are one, the European Commission document. Second is United Nations Global Compact Principles. Then you have Universal Declaration of Human Rights. When you sign a contract with any big corporate house in India, in the standard terms they write you will not be including child labor. It's not because of this Companies Act or otherwise. They call it, whenever you are talking about emission, they talk about scope 2 emissions or scope 3 emissions, that is indirect emissions. They impact the way you buy. So those things, I'm happy that such kind of things are also included in syllabus these days. Then you have OECD guidelines for multinational enterprises, which talks about anti-dumping. You can conduct your business in a smaller countries in a manner to kill the entire backbone of that business of that country, and then charge your price artificially. So these principles stops an organization from doing that. You have ISO 26000 guidance, which deals with environment, and most of your companies or clients would have already taken it. It is we who have to take an extra step to understand what they are taking. It's already there with most of the clients. Then International Labour Convention, and finally Global Reporting Initiatives 3.1 and now G4. So when I look at it, all these things are just subset of one framework. The subset is the one single framework, which is the widest framework, the global leader in terms of organization. For example, when we talk accountancy, we refer to IAS people. To think of a standard, it's there. Then you don't have to refer to standard issued by Sri Lanka, Pakistan, India. You have a global benchmark standards, that is ISP standards. As an example, I stated that the same way you have GR, and it's way ahead than all the standards put together. USA has something, but it has not evolved that effectively. Now let us look at what Indian corporates are already doing. First, all the Indian corporates, the top 100, there was a voluntary disclosure requirement of compliance with BRR guidelines, business responsibility report. It set 9 core principles. These 9 core principles were already there in some form or the other, but now it is brought on surface in the annual report. So when you look at annual report, I showcase one which I have worked upon and I am familiar with, only just to say because I have some insights. BRR report. Another thing, and the 9 core principles that it is talking about is principle by principle, and it gives some citations. The indirect impact is when you write something in your annual report, it goes through your own audit committee, your own stakeholders, your own directors, and various functional heads. They indirectly become sensitive to all this, so they reinforce at least once in a year. If there is no standard system, at least once in a year, to annual report. The 9 principles which I addressed are ethics, product sustainability, employee well-being. In other words, employee, anything not in the nature of gratuity, but something extra that you end up doing could be included. Stakeholders engagement, that before deciding what is material, you consult those NGOs and then work out what is material to them. That means stakeholders engagement. human rights, environment like solar, public advocacy like active responsibly and showcasing yourself as a company, inclusive and equitable development, and customer planning. It focuses on those 9 principles, and I'll show you a sample. Globally, GRR. It gives quantitative and qualitative indicators. The quantitative indicators that needs to be disclosed are in all 90. See, the moment you talk on environment, they'll say give your emission of CO2. That is carbon emission. You have to quantify that number and give it. The moment you say donation, quantify the number and give it. There is a qualitative write-up and quantitative write-up. The quantitative write-up, which is already there, is classified in various buckets. These are economic and society, energy, including occupational health and safety, then environment, labor rights, human rights, economic and human rights, product responsibility, society and product responsibility, and again society and product responsibility. But the departments which are covered are very different. Now I'll show you certain examples before we go for Q&A. Whenever you do such reporting, there are global agencies which give certificates. Okay. So organizations which are already doing that, they issue certificates that you have done and disclosed. So that verification of data is the responsibility of auditors, and there are few audit firms using their global network they are doing in India. Using their global network. Now what is the world-class certification for having your sustainability report? It is AAS 1000. Can you all repeat that certification name? AAS 1000. That is accounting related. That is not accounting AA. It is a standard setup in Netherlands. They have authorized certain agencies to conduct. Invariably, few of the big four are also into that service. One such service we have already taken, and we get it through one of the big fours. We come audit, check all those 98 parameters, both quantitative and qualitative. This certification applicable level that we have been getting, if you see, it is A+. A+ is the highest level certification given by GRI, and I am proud that I am associated with a company which is having this certificate from last 7th year, and for the 8th year I am responsible to have it from them as well. That is one. Second is, there are most of the organizations have chosen to go for compliance or business responsibility report. What we have attempted as part of annual report, you look at business responsibility report, there is corporate information and basic details so that they can be tracked. But when it comes to talking the 9 principles, so when you will say, for example, principle 1, ethics. So what is the corporate philosophy which has been included, and these are mapped again to HR processes as an example. An example for each of those 9 policies and behaviors backed by citations. This is literally a subset of GR. So for many corporate, this was a low hanging fruit already there, published from 7 years. So BRR came, so publish it here. But choose to. Now let us look at what's the importance given when you position yourself apart from business, these days corporates also position themselves as part of social responsibility. So we have also chosen to showcase the factual information. One of the factual information is contribution of 712 crores, which is 3.24% of our net profits, which was spent in India, irrespective whether the law required it or not. Globally, the concept of sustainability was considered as a triple bottom line reporting, and the emerging concept is 4P reporting. So there are highlights of those citations. Those who want to go there in detail, they can read sustainability reports, which are also there on the website. In other words, whether it's a practitioner of secretarial or income tax or chartered accountant, this is an additional area where they can render services. And the framework that can be used is GR. With this, I would like to now invite your questions. To make you think through, I'll open up the index. Please choose your questions. Yeah.
There are these 10 items given.
Yeah.
There are 10 items given.
Yeah.
But nothing is given as far as the animals, birds, or the conservation of natural resources like forest, river, etc.
Yeah.
And I think they are part of the society only.
Yeah.
Without them, we will not survive.
Yeah. See, I'll put it that way. The word environment also will include river. And whenever something is non-urban, you can take a lot of flexibility in taking it as part of rural development. So, bearing for certain situations, there is a perception in society. First the perception and then the lawmaker's response. There is a perception in society, there may be a medical college which is donated. It may not be a donation, it might be some remuneration for the next generation. But the person who has donated a college did not intend to earn out of it. The second, third or fourth generation are not strong enough to earn or run the business, they have started into nefarious activities. But if a practice is ransom in India, and India is already high in its corruption index globally, then the lawmakers have identified certain pockets, and without stating it so clearly, they are excluding certain activities from donation. So when we connect the ground reality and the exclusion, the persons in senior coterie can understand the reasons why it is outside. But if you interpret liberally bearing those certain situations, the most of the items are getting covered in one way or the other, including the law. Why? Why? You will.
Animals and birds and natural resources, conservation, forest.
Environment includes animals. So it's covered. Birds includes animals. Birds includes environment.
We human beings should not be so selfish.
Thank you. So I guess you have got your answer. The application is broader, so that's why I make you all to go through the point by point, the core principles. There was a quick, before you, somebody else raised their hands. If you can speak aloud, please.
As you said, hello.
Hello.
As you said, for things that they have to finance for network or turnover or net profit and so, annual condition.
Yeah.
And for last 3 years.
Yeah.
And you have to spend for coming 3 years.
No. Current, see what it says, you have to spend coming 3, once you are there in meeting the criteria, and the criteria was met in the first year, but not the remaining 2 years, then only current year I have spent. So in any of the last 3 years, I was meeting the criteria, I will be spending in current. So if in the immediate last year I met the criteria, I will be spending in this year and subsequent years.
But if second years if has the loss, then what?
There was a clarification The loss year will be excluded. You take only the years in which you have profit divided by 3.
Loss is excluded.
And
The year in which they lost, it is excluded, you mean?
only the year is not excluded, loss is excluded. So what is left is profit divided by 3.
Okay. Secondly, there are so many conditions. You don't think that if a management taking CSR and monitoring CSR and all this, it will affect the business of them?
I will say, if I were to judge,
Because both
I'll answer this. If I was to respond, whether there is an increased workload, to some extent, yes, it is. If you speak to a branding professional, he will say, no company is benefited out of it. But irrespective of whether there is a benefit or not, these are meant for those persons who are already well to do in the society. And when you end up really interacting with those persons, most of them are already there. A part of their wealth, they have already divested. You take good names, be it a reputed stock broker, be it a reputed global software leader, be it a local software leader. They are thinking 50%, 60%, but that momentum is already there. What the law says is only 2%. And by default, most of the organizations are doing it. They might not have clubbed and reported or highlighted. So yes, your question is whether it is there is an extra load. Yes, there is an extra load. If you cannot do it on their own, you don't spend. There could be certain questions which you have to handle, and there are certain segment of professionals which will help you out in handling those questions.
Thank you.
Sir,
Yeah.
in slide number 6, we are saying that you have to exclude dividends from companies to whom the criteria are applicable for CSR.
Yeah.
Now, what in case where the companies are not compliant? They are applicable, but they are not compliant with this.
Then also you will exclude it.
Then
That non-compliant will be taken care of with him, not in your computation.
okay, so for example, if it's an investment company holding shares,
Yeah.
and out of 50 companies, 30 companies will be applicable.
Yeah.
Does that company have to really identify whether those 30 companies are complying? Or
No, they don't have to identify.
They don't have to.
They don't have to identify.
They can simply just.
Yes, simply do that.
Thanks, sir.
That was.
Hello.
I'll start towards the last. Yeah. Okay, here we already had a mic, so we'll start. Sorry.
Yeah. If the undertaking, one of the undertaking of the company has already set up solar energy plant, whether that expenditure can be termed as CSR or not, based on the reasoning, the organization is already availing of credit, carbon credit, and as well as income tax benefit.
Yeah.
So, on that basis, can it be denied or it can still be considered?
There are a lot of companies which went. First is the fair reasoning, and second is whether you want to do it or not do it. The fair reasoning. The fair reasoning is many companies have gone into for such expenditure, and they want into registration, or they have plans for registration of the carbon credit project. Some time back, the price per unit of those carbon credit project was generated was $16. Today, it is not even 20 cents. Now, there could be corporate who would try to do some earning out of it, but now they are showing it as a CSR. It will emerge more as a public shame, because what happens, whatever you publish is there in public domain, and there are a lot of agencies which are analyzing it. So there will be sooner or later a lot of good practices which will be disclosed, and there will be citations which will be disclosed. You see, they have done it, I will this. So if CSR, if we are willing to take that shame or a negative hit on our brand, then we can choose to explore ways to argue those things.
Basically, the medicine aid, I think the definition is very narrow. So if a company, is giving